Hello and welcome to the Money Show, your one-stop destination for all personal finance queries. I am Snehi Shah. We have lined up a power-packed show for you, and now we're being joined by Roongta, the founder at Fee Only Investment Advisors LLP, to help us understand what balance advantage funds are, how they work, and what are the risks associated with these funds. And well, in the second leg of the show, we will throw open the counter to get your mutual fund portfolio queries answered. So do send us your queries on our WhatsApp number 865 797 4571, or you can also email us your queries on the Money Show at etnow.tv. With that, let me welcome Mr. Roongta on board. Mr. Roongta, thanks so much for taking the time out and joining us today. Let me start by asking you, what is a balanced advantage fund? What does the asset allocation look like? How do these funds work, and what's different about these funds from the regular mutual funds? Help our viewers understand all of this, please.
Balanced advantage fund, as the name suggests, uh, has an allocation between equity and uh, debt or fixed deposit type of instruments. Basically, the proportion between equity and the debt portion is determined by a formula. It is not determined by the fund manager's view, but it is determined by a formula. And typically, the formula is basically whenever the equity market, as per the formula, is priced high, it will sell equity and move into debt. Whenever the equity market is priced low, it will sell debt and move into equity. And thereby, typically, most balanced advantage funds are what are called counter cyclical. The best thing about this is that it frees the investors completely. They don't really have to take a call on where the equity markets are going, etc.
All right, Mr. Roongta, point well taken, and thanks for that detailed explanation. But could you also explain to us what are the top advantages or disadvantages of parking your money into a fund such as a balanced advantage fund?
As I mentioned, from an investor perspective, what a balanced advantage fund does is that it allows you to take exposure, uh, a measured exposure to equity, uh, without really having to do timing. And that is the reason I think a balanced advantage fund is has an advantage over, let us say, an equity fund, because it reduces risk in the manner that I just outlined in my first answer. These funds are great for those investors who want equity-like returns, but want to reduce the equity-like risks. So this gives you, obviously, the equity-like returns come with equity-like risks, but they are much, much lower than a pure equity risk.
Well, Mr. Roongta, you did mention that the key objective or the key aim of these balanced advantage fund is to moderate your risk and not to maximize your return. So would you say that these funds are a good investment to beat inflation? What's your view on that?
In the sense that over the long period, over 8 or 10 years, equities typically tend to beat inflation. And because a balanced advantage fund is likely to give you equity like returns, it should be able to beat inflation over a long period. So, this may not necessarily pan out in 1 or 2 or 3 years, but I think over 5 or 7 or 8 years, you should be able to beat inflation.
All right, Mr. Roongta, and how should investors determine if the balanced advantage funds are suitable for their investment objectives and risk tolerance? What are the factors that investors should consider when selecting a balanced advantage fund, considering we have so many available in the market at present?
So two things. Which kind of investor should invest in a balanced advantage fund? So basically that portion of your investments for which you want an equity like return, but your risk appetite might be a little lower. So, for example, for a goal that you may be aggressive, but the goal is only due in 5 years, which is sort of medium term. In which case, a balanced advantage fund might be indicated over a pure equity fund. Uh, or you take even a goal that may be 10 years from now, but you have a moderately conservative investor, again, for that person, maybe a balanced advantage fund could be indicated over a pure equity fund. So I think it is very much part of your asset allocation and how that is decided. Now, which kind of a balanced advantage fund to choose, how to choose? So the way we look at it at our firm is basically we look at the formula because there needs to be a formula based allocation in any balanced advantage fund. Now, the standard information document does not contain the formula. These are available in the various PPTs, etc., that the fund houses have put out on their website itself. So this is one area where we would be talking to the fund houses to just make sure that they are actually following the formula and that the fund manager bias is not creeping in. Because the whole idea of balanced advantage fund is to free the asset allocation from subjectivity of the fund manager as well.
Well, all right, Mr. Roongta, thanks for taking the time out and joining us today. With that, we'll let you go. Viewers, with that, we'll slip into a very short break, but you stay right tuned because when we come back, we'll be answering all your mutual fund queries on the show, so you stay right tuned.